Invested another $1,275 into my stock market portfolios. And with the recent downturn, it's been nice to have another green day after strong employment numbers coming out of the US. I'll take you through first what I've invested into across both my stake account and my Vanguard account and why I've done so. So I'll take you through my stake account first and some of my recent transactions. I made 4 buys. This included VOO, Apple, Microsoft, and Costco. You can see the different prices here, and we'll start with VOO. I invested almost $140 into VOO, and this just tracks the overall stock market and the S&P 500. It's been a rough year for the S&P, down 16%, but recently it's not been as bad as things have gone back up in the last week over strong results. It's still down over the month, but overall, it's better to buy in now while it's lower. I know there's fears over the upcoming year and the recession possibly continuing, but my average price is now just dipped under $390, and with the stock sitting at $356, it's still well under my average price, meaning if I'm buying in now, I'm dollar cost averaging lower. The second stock I bought in was Apple. Apple's another stock that's had a really hard year amongst the other tech stocks, and it's all the way down to now under $130. When I bought in, I was lucky enough to get it around $125. It's now gone back up after that recent surge, closer and closer to $130. My average share price is around $134 on Apple, and it's actually one of the first stocks I ever bought. Apple's such a strong company with such a strong sticky moat. I did a recent video on them on kind of explaining a bit more the situation, what's going on at Apple right now, but if you wanted a bit more of a deep dive, you can check into that. And I also have this article which the Motley Fool put out, and it's just kind of speaking on how the pandemic era affected Apple and the recent change to its valuation, as it used to be it's now a $2 trillion company. Apple had a recent fall off in the last year, around $800 billion of its market share, which is around 30% off its all-time highs, and has fallen below $2 trillion. And again, you can kind of see this. And there is a risk that it can still go down. In the pandemic, lots of people were spending money buying online, using the Apple products and using lots of software products. And yeah, as the economy's kind of changed a little bit in terms of people not wanting to spend as much, people pulling back, continuous fears of a recession, and the current recession continuing. Yeah, it's just been tough for a lot of businesses, and Apple, even though it is such a strong company, is no exception. At the end of the day, they still sell a premium product at a premium price, and yeah, I know even for myself, it's a very sticky ecosystem. Once you have an MacBook, an Apple Watch, an iPhone, it all just links together so well. Things like debt and Apple in general isn't something you should worry about. They carry so much cash that they could pay off all their long-term and short-term debts. So this company's in a strong position, and having it dip down like this, yes, it can still dip further, but this is below my average price, so I wanted to invest now while I still could, and yeah, it's something I plan on holding for the long run, so I'm not really too worried over the short-term results. The other one I invested in was Microsoft, the fellow tech giant, and Microsoft has had a rough year as well, down pretty much similar to Apple. You can see it just trade down over the year, down 30% I should say, and exact same thing as Apple. Great strong company, strong moat, lots of cash on hand, not going anywhere anytime soon. And yeah, even with tech having these fears of layoffs and fears of just kind of going forward, lots of people are doing work from home, things like that. You look at Silicon Valley, the commercial real estate issues that are going on there right now, but that's another video, another story. But in terms of me buying Microsoft, this was a stock I was up a lot on, and now I'm down. My average share price is around $266, so yeah, whenever I can buy it at such a discount that it is now compared to my average share price, it's always a good buy. $224, again, same as Microsoft, it can still go down, but if I'm dollar cost averaging as it's going down, my average share price is going down. And hopefully when things rebound and we're in a bit of a better time, things can go back up. And yeah, I can kind of see the gains from me investing in now. And the more I invest, the more shares I get, more dividends I get. Microsoft isn't a big dividend player, but it's still better than nothing. And yeah, there was even another article I was reading about how Microsoft's undervalued with its growth, and it kind of went through some of the company's earnings. And yeah, again, Microsoft had strong earnings, beating on both revenue and earning forecasts. But yeah, just in this overall market, how it's just not been nice to anyone except for probably energy and oil. But yeah, Microsoft has fallen. I see this as a great time to buy in, especially, yeah, you compare it to the other tech giants. I think Microsoft is a much stronger company, much better stock than a lot of the other ones, things like Netflix, Meta, even potentially Google and Amazon. So I think it's a great time for myself to buy in. This isn't for yourself, but for me. And yeah, they've consistently posted strong earnings year after year, with growth in all their sectors. And yeah, even if they are cutting back workers, that can be a good thing. Cutting back costs and kind of working a bit more efficiently, that would be good for shareholders as well. Kind of being able to hopefully invest some of the more of that money into development and kind of cut back costs and maybe even increase dividends, things like that. And yeah, kind of get us through this tougher times as the last 2022 was as well. The third stock I bought was actually Costco. This stock had an amazing day, up 7.26%. This was after really strong earnings, good forecasts. And yeah, this is a company I really enjoy. I really liked Costco, great business model. They keep opening up, great wholesale. I know even myself, I have a Costco membership, and this is another stock that had an amazing year before. You can see this upturn that it had. And then recently it's been a bit slower, but my average share price is around 495, so it's sitting at around 480 right now. So yeah, me buying in can pull it down a little bit. And yeah, I don't see this company again going anywhere anytime soon. Such a strong business model and such a good company, well run, that yeah, they should continuously just keep putting out strong earnings. And a big thing with my portfolio, if you see any of my old videos, I've cut down the amount of positions I have, because just trying to be a bit more simplified and with strong companies that I know will see success. Even my small positions, like my Amazon one, is just a small position I bought into with extra money I had after a sale. Yeah, JP Morgan, VOO, Google's another strong company. I understand it's had a rough year, and yeah, I'm kind of reshaping the portfolio at the moment. And those are kind of the 4 buys I had in my stake portfolio: VOO, Microsoft, Costco, and Apple. And you can see how much again I put into those ones. So it was around that $470 US. And then in my Vanguard account, which has now grown to $3.5 thousand, which is nice. We go through into my portfolio. I bought into a ETF, which is called VLC. So you can see I put around $577 in. And this is kind of just a Australian, so I am an Australian resident. This is an Australian tracking ETF, so it just tracks the largest companies. So if you go back to my portfolio, you can see I do own the Vanguard Australian Shares Index ETF. This is a bit more broad. This tracks a lot more companies, where just this large one has actually given better returns recently. And I'll take you through some of the holdings. Yeah, so some of the holdings are just the major players in Australia: BHP, Commonwealth, National Bank, all these big ones, Macquarie, Wesfarmers. It's just a kind of a breakdown of the top companies, the top 20. And you look at the results, how it's been performing over the years. It's actually been very good, especially since it is just the best of the best, the cream of the crop in Australia. So it is good I think it's good. I wanted to invest a little bit now, and you can see how well it's done, even since post-pandemic, how good the stocks have done. And I wanted to increase my investment in Australia as well, because I did, at one point I had pretty much all my money in my stake account, which was my American stocks. This one will kind of gives me a bit more diversification into into the Australian economy as well. So kind of looking through my portfolio, it's growing, and yeah, it's nice having this as well. These positions are a bit safer. They're all ETFs, all diversified, compared to my stake one, which is a bit more volatile. I've got more just individual stocks, but I am growing my VOO position. You can see it's by far the biggest position in my portfolio. So that kind of hopefully balances it out. The reason I'm investing right now is just because just with my new job, I just have a lot more money, so I can kind of stack the money away, and I've been saving more money, so I thought it was a good time, even though yes, potentially it could go down even more. Investing now kind of allows me to just buy in while things are a bit cheaper, even though it could go down further, just while I have money, at least putting some in, and just kind of investing some of my money. And since I am growing my savings as well, just kind of balancing both. Going forward, I'm probably looking to, again, I'm going to get this VOO position up to $6,000. That's a goal of mine. And then the rest of them, my JP Morgan position, I do want to grow, but it's risen back up recently, so I didn't want to buy in it compared to the discount that a lot of the tech stocks are at. So I'm probably going to put a bit of money into my JP Morgan position next. And probably Costco as well, as I try to move a bit away from tech, because if I was looking back at one of my old videos, I was in stocks like Meta, Alibaba, just pretty much any tech stock you had, I was in. So it was a bit of a mess, but it taught me good lessons, especially when things fell, kind of learning a bit. I was actually invested in Tesla a long time ago, and I sold out of that for good gains, and very happy I sold out after the recent time it's had, so I was able to lock in lots of money on that. But the portfolio is back over 20,000 after a bit of a dip after I sold some positions, just to kind of simplify it a little bit. And it's good to have it back over that mark again, and that's just a bit more of an insight of how I've been moving with my portfolio and kind of the goals going forward. Leave your thoughts on how you're investing in the comments, and what you think about my positions I've bought into again. And that's just a bit more of a summary of how things have been going. Cheers.